All right, team, I'm live. Let's get started. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Almost got stopped out of a couple of these positions today, but managed not to yet. Let's take a look at this market. All right, so I don't know if it was a blessing in disguise or what that the market gapped up so big and put us in an area where I thought it was more difficult to do a lot of trading because of how weak we ended up closing. Originally pre-market, before the CPI number came out at 8:30, I was excited about today. I was looking at a market that was oversold on multiple metrics. The short-term sentiment indicator was in the buy zone, if you want to call it that. DeMark 9, a lot of extension to the downside based on where the market's trading versus the space between the 8 and 21 EMA, particularly for the NASDAQ. And I thought that with a flat-ish open after it was sounding like, one of the things that brought us lower into the close yesterday was the possibility of a chemical attack having taken place in Ukraine. It sounded like that wasn't true. So I really thought that there was a lot of reasons for us to go up. And then the CPI number came out, and let's take a look at the 5-minute chart pre-market here just so we can see the upside explosion this market had off that, right here at 8:30. The CPI number came out. So at a very initial first glance, I'm looking at a CPI at 8.5% versus expectations of 8.4%. Oh my God, inflation is worse than expected. And it is when you're including food and energy. And I think you should include food and energy because that's the number one thing that Americans really need. Like what do you need in your life? You need to be able to eat, you need a roof over your head, and you need to have enough energy to be able to keep warm, whether you're, burning wood in the fireplace or you're using gas of some sort or even coal or whatever. You gotta be able to have those things, and obviously in our modern world, being able to drive and put gas in your car is important. So that number doesn't look great, but then if you look at it, the core number without the food and energy, that was actually better than expectations. What was the number? I don't exactly remember. 6.3% versus expectations of 6.4, something like that. So that was better. And then, Josh had posted a piece of information in there. I'm sure everybody remembers, with COVID and everything that was going on, the really big deal out there, one of the many really big deals out there was the price of like a used car. That, forever you've always heard that as soon as you purchase a brand new car and drive it off the lot, it depreciates by whatever percentage, right? It immediately depreciates by 20% or 15% the second you drive it off the lot. That's always been that way until recently, when people couldn't get cars and people were like literally willing to pay more for a used car than a brand new car just to be able to get the vehicle. And that now has come down a little bit. Thanks, Robert. Expectations were 6.6, actual was 6.5. So I'm like, okay, I'm looking at the market rip higher here, and I'm like, well, first of all, technically we should bounce just because of all the reasons that I already discussed. And outside of that, the market really seems to be taking it in stride about, this number here that is X food and energy, which, by the way, while I personally think paying attention to food and energy prices is extremely important, the Fed in their official measurements don't. That's why it's important. It's probably why the market ripped, because the number one reason why interest rates need to get moved higher here by the Fed, which is creating the demand destruction that we discussed in the morning meeting that's probably lowering this number, is because inflation is so high outside of food and energy. So if that is now maybe signaling that it is starting to abate, maybe start to come down a little bit, not meeting expectations, that could be a really good thing. And maybe the Fed is not going to have to increase as much over time or whatever it is, or it's just generally good for sentiment because, well, a lot of people are really nervous and worried about inflation. So the market just went on a tear here at 8:30, and it was without a doubt a positive number. We had this little extension 5-minute shooting star, and we pulled back into 9:30 when the market actually opened, which was actually a good thing because I think it gave you an opportunity to maybe be able to get long off the open without having to chase these really high prices. But all the same, even with that, while I at 440 was really excited to be doing some buying today, even with the pullback off pre-market highs, the 443 open is a little bit tricky because you are opening up an extended territory here. So the biggest thing that I want to see is how the market handled the opening gap. Do we price correct down? You know, this is our standard gap analysis, right? When we have these really big type of gaps, we want to assess what type of gap it is, what is causing it. Like in this case, it's technically a common gap, but it's caused by news. So we know common gaps tend to get filled, but we know that if the market is loving this news, that there's a chance that maybe, I'd say a little bit of a higher chance that the technicals don't work perfectly and the gap doesn't fill itself. And a lot of times when a gap is not filled, the market mainly just needed to correct through time or price versus our equilibrium zone. So like in a really strong market, as an example, you get a common gap to the upside instead of getting a full gap fill. A lot of times the market will just kind of correct back down into this 821 EMA equilibrium zone on the small time frame, and then find its pivot, its footing, and then pivot and be really strong. So that's the biggest thing I wanted to see is how does this market handle this opening upside extension? And depending on which index you actually looked at, you have a different answer. The SPYs spent 5 minutes, probably more like 8 minutes resting, letting these moving averages catch up, but not fully even getting up to lows, and then took off. The Qs had a much bigger price correction. They sold off the open, made a pivot low, kind of price corrected into the ADMA, and then gave this like beautiful like inside continuation hammer for continuation. And the IWM was just a monster. Just a monster. Opening up, extending like the other indices and saying we don't care. Extending, loving it. Mid caps, small caps, let's go. Just totally ripping higher. Even here on this pivot point, not even all the way to the ADMA. Just so much strength here. And I was impressed. I was really impressed by this market. And I was like, okay, you know, let's see how, at this point, let's see what this turns into on the upside. I'm honestly almost thinking we can overshoot. You know, that downside extension gets satisfied with the SPYs basically at highs. So that was able to get satisfied. The Qs, you know, could easily have snapped back much higher today. They could have gone they easily could have gone up $2 more to 350 or $4 more to 352 today. IWM is leading. So yeah, you know, that corrected all the way to the 21 EMA to this equilibrium zone, but IWM is leading. This is fantastic. We spoke, I think, last week about the importance of how this IWM, this Russell, has really been leading the market. It let us lower back in November. It held up best, you know, kind of in the February-March period of time, and then weakened again here more recently and led the market lower just to be leading intraday this morning. So the IWM, especially seeing that strength and seeing that leadership, had me super excited. And you know, NASDAQ, like I'm saying, was a bit weaker, but has plenty of room here to the upside. So I'm thinking to myself, wow, we could really overshoot. You know, if this market, obviously we got to pay attention to our small time frame extension. I'm never going to advocate buying here, you know, at 9:50 a.m. with the SPYs above 445 and the ADMA at 443. As a matter of fact, into highs on the day, we were correctly, Josh and I were both talking about how traders should be booking profit into this area. And that actually turned out to be accurate, but not for the reason I thought. I'm saying, guys, let's book some profit here because I'm expecting a technical pullback to equilibrium. And it's like, okay, fine. We pull back here. I remember looking at this candle here at 10:05 and saying to myself, you know, we really should probably have a 15-minute correction, but this market is just so strong right now off the CPI that I won't be surprised if all we get is a 5-minute correction and then continuation. At the point where I didn't hate the idea at all of trying to buy off this pivot low, but then of course that low breaks, and then it's like, okay, fine, you know, time of day here. 15-minute correction makes sense. So this pullback here, fine. This attempt of a pivot here, a little bit deeper than I would like. You know, what time is this? This is 10:30. You're not going to be able to see that attempt on the 15-minute, I don't think. At 10:30, no, that ends up just closing as another weak candle. Fine, they're trying to make this pivot. I remember IWM here was also trying to create this pivot point right into its kind of equilibrium, and I really wanted this IWM to be able to hold above 200 bucks, and then just nothing. And this, I started getting really concerned on this candle. We've now just pulled back too much. We've extended through on a 5-minute correction. The 15-minute correction, it's like, okay, fine, you should be correcting on a 15-minute at 10:30, 10:35. But this pullback as a percentage of this initial upside move is becoming a little bit too much. Yeah, we're in a volatile market. That happens sometimes where maybe lows can roughly hold and we can pivot, something like that. But starting at this point is when I was first looking at this market from a bullish perspective off of this initial move. How could you not be at least small time frame bullish on this initial move? Based on where we are on our daily charts, with the extension we have on our daily charts, especially in the Qs, and the room that we have to the upside, with how the market's trading intraday, how could you not be overall bullish even as we're pulling back here, looking for the higher low for continuation? I think you need to be. I think that's the smart move. Sure, book profit into extension. We called that out. But now on this pullback, what can we get involved in? What can we add back? Or what can we add? What new trades can we get involved in? Because this market looks so good, even at this time of the day. By the time this 10:35 candle came in, I'm sure you guys could tell my whole demeanor on the VTF probably changed. Like, this just isn't right. This market just isn't trading right. And it's like, okay, we broke this opening low here, especially for the NASDAQ, which you could take a look at. But this, we do sometimes see, and it's frustrating. It wouldn't be the first time in my career I've seen this, where, they break this opening low on a pullback that's deeper than it should be. They break the opening low here just to shake out all the day traders, and then the strength comes. I'll tell you, all this time here, even as I was getting more nervous about the market and saying things didn't look right at 10:35, I did not think, and was totally wrong. I would have bet a lot of money that there was no way that we were going to end up closing below yesterday's low. And we sure did. And that's why risk management's important. This market totally fell apart. And I can't really put too much of a rhyme or reason behind why this market acted so strong and so aggressively initially, just to then become terribly bad here. I mean, we do know, and we did discuss at a certain point with this price action, this sell-off here into 440 was ruthless. I think it was here that we were chatting, and that's maybe when I jumped back on the radio, we were chatting about how, all these people who got faked out by this market are now getting squeezed out of their positions here, and that's what's leading to this, further selling. Once we broke down here, this last 2 hours of trading was just so bad. It was just so bearish, especially after how this market traded initially. And then what we have here at the end of the day is a daily candle that I think looks atrocious for the indices. I can't think of this looking more bearish. I had originally thought, and I guess I was right for a minute, I had originally thought back here in early April that we would not see just the way we went straight up, the market more or less go basically exactly straight back down, like we saw, in January, like we saw in this pocket here in February. I did not think that we would just be going straight up and then straight down. I thought that we were going to build a wedge out. I discussed, back in, I think I discussed on this trading day, but thought that the highest probability situation was going to be a big picture wedge for the market, that the second highest probability would be a complete rollover, and that the lowest probability would be working our way up. And, we tried to build out that wedge here for a couple of days, which I thought was the highest probability situation, and we didn't even really fully build it out. There was no, usually when you're building out that wedge, you got that high, you got that low, then you kind of get another lower high, but it holds up in here and tightens out, and then eventually the market chooses a direction. That's just not what happened. We tried to make that pivot low. We tried to build out the beginning of that wedge. And as of yesterday, it just failed. Okay, fine. Market's definitely not looking good yesterday. And I know Pat was doing the afternoon meeting for the team. Market's definitely not looking good, but it's into 440, and it's very extended into 440, and 440 is an important level that we had to recapture. I'm sure people remember here back in February and March, this 440 kind of becoming resistance. We spent a lot of time talking about it and failing there, and then into this bounce back. We were like, oh man, can we recapture 440? And then we were able to. We just blasted right through it, extended back into 440 again. I'm looking for that bounce today. The bounce happens off the CPI number. We touch equilibrium and then close back almost at lows. It's really bad price action for bulls because this price action really makes us much less extended now. In some ways, it's almost similar to this day, this trading session right here. I remember this day here, the market had broken down, right? Big red day, a little bit of a bounce day, but we basically closed flat. Red day, and then on this day, we gapped up a little bit, snapped back to the 80 MA, just to trade all the way back down. So basically what this candle did right here is it helped the market be less extended. And that's exactly what this candle is doing. This is a bearish candle. We closed below yesterday's low. We closed below 440, which is a key level. Yet we were able to do it with tailing up into that equilibrium zone, which is allowing us to cool off. Like that short-term sentiment indicator will probably not be in the buy zone tomorrow morning. We're probably not going to have those same indicators and that we're saying come in this morning and buy. We're not going to have the same degree of extension that I was looking at, last night and this morning after today's price action. Yet we still closed below 440. We lost a support level, and we touched the 80 MA. So it's just this is really not good, and it was just a big fake out here for the market off the initial positive reaction on the CPI. We can look at the other indices as well. I want to look at the IWM actually before the Qs, because this is also just a terrible IWM candle. Intraday today, like worst case scenario, I wanted us to close above $200 today, and we couldn't hold above that at all. And honestly, I thought we were going to overshoot on this IWM because it was leading. And this is just also a really bearish looking upside tail into that equilibrium zone where we closed, pretty weak here overall. And then the Qs, the only thing that you can say about the Qs is that the Qs are actually still pretty extended to the downside, because even that bounce today couldn't get you back into the 80 MA. Even at highs today, which shows you just how bad today is. Even at highs today, we were still extended by the 80 MA by $2.5, something like that. And now at the close here, we're below 340 with the 80 MA at 350. So we're extending the downside in the Qs by like $10 or so. That's the only thing that you can point to, is maybe the Qs are almost too extended and they need to be able to have some sort of bounce. But look at this pullback already. You bounce from about 320 to 372, which is called $50, and now we pulled back from 372 down to 340. So it's becoming a large percentage of this up move here that we've now really retraced without even a real sustainable bounce. Like after Monday, I think that was Monday last week, like we really haven't seen a green day for the market since then. I know you got one green candle in here by a little bit, but it's 1, 2, 3, 4, 5. In a lot of ways, it's like the 6th down day in a row. But we're not doing it in such a way where we're so massively extended. Like this is almost like we corrected here, we rested a little bit, and now we broke down, and then here we were able to price correct and time correct a little bit. We can easily go lower. And this candle was terrible, and I don't know what can save us at this point except for possibly earnings season. It's going to be an interesting earnings season. Josh was commenting on it earlier today. It's going to be an interesting earnings season compared to some of these previous earnings seasons where these stocks still had very lofty prices. Maybe some people can make the argument that from a fundamental perspective, they still are a bit lofty. But it's going to be an interesting earnings season because I think expectations are just significantly lower on a lot of these reports as far as like whisper numbers and things like that. than kind of the previous handful of earnings seasons that we've had. But let's see what happens with banks, because banks started things off in a really bad way last earnings season. But the banks are also I don't know. Banks have just been trash here for a while. This range has been so hard to trade. I think the banks have really been in a void for a while. And that's pretty much all I got. My focus was the market. Did have some names on the radar today. Some things were okay. CRWD we talked about. Oh, wow, look at this. I didn't see how this thing closed. That's a terrible candle also. Still obviously green, but CRWD we talked about. HP we spoke about. HP gave a great initial momentum move here, and then the market got to a little bit. I wasn't sure where the relative strength and relative weakness was going to be this morning. I was trying to get that a point across in the morning meeting. I kind of thought it might actually be in growth, and the reason why I thought it might be in growth was specifically because of how the market was trading early on and the strength that growth showed yesterday. I didn't think it was going to be in energy, but I had some energy names on the radar. We had Halliburton on the radar today. It's also not good. This thing tried to be so strong early on, and that's just it's just not a good close. We had Oxy on the radar today. Similar situation. Tried to be so strong, getting above yesterday's high just for a terrible close. We had TLT on the radar today. And by the way, going back to Oxy, just to give Josh another shout out. I usually don't give Josh as many shout outs, so hopefully he's not listening to today's afternoon meeting. I don't want it to go to his head. But Josh had just a fabulous call off this 5-minute continuation hammer off the ADMA. This is exactly the type of candle that I look for in a strong stock when it pulls back into that equilibrium zone for a long, if you missed the kind of opening buy here, this was just such a great opportunity to be able to get stock. And I guess he's not here because he definitely would have made a comment by now. And TLT was the other one that I had on the radar. Originally, I called out TLT long versus the pre-market low, which I'm not even gonna look it up. It was down at like 122-ish or something, but the gap up was too big. But then this gave us like a similar pattern. I usually don't like the TLT, and I mentioned this morning during market hours when I call out the 5-minute trade. I usually don't like TLT as a trading vehicle. I usually like to just watch TLT for information, and that information is something that I'm going to apply to the market and to my thesis and my thought process and everything else. But yeah, this TLT, it's incredible to me that this thing still closed this week, given this downside move. I called out a trade here, said to book profit here, so I hope people did. And I hope people weren't late. Someone emailed me and said they were late. Guys, you can't be late on your trades. In these types of market environment, execution is so important. You have to execute properly. Execution, I'll tell you when execution doesn't matter. You don't have to execute well when your trade works perfectly. You can be late, you can get a garbage price, trade works perfectly, you're going to make money, you're going to think you're great. Execution is so important though for when things don't work. Because when things don't work, having good execution on the trade is oftentimes the difference between having a zero at the end of the trade, meaning you made or lost nothing, and having a straight up loss. So if you executed this TLT well when I called it out, this was enough of a move here into these highs where you could have booked a little bit of profit and made sure that you got the risk covered. But if you were late and you're chasing at 124 when your price needs to be 123.80 and your risk is just to this low, so you're taking on here you're taking on 17 cents risk, here you're taking on 37 cents risk. That's what I'm talking about. Taking on 37 cents risk here is so bad for a number of reasons. One, you got less stock, so if the trade actually works really well, you're not going to make as much money because you got less stock for the same dollar risk. Two, if the trade doesn't work, you're losing 37 cents, and the person who executed well is losing nothing on the trade because they're able to get some risk covered, and then they're getting stopped out, and they're being able to break even. It's so important, guys. Almost always, I'm going to say 95% of the time, maybe even more than that, you are going to be better off missing a trade and not being involved in that trade at all than being late on that trade and having a bad price. maybe once in a while, the thing is so compelling. The volume looks so right. Everything looks so right that you say to yourself, you know what? Man, I really messed up by not having the right price, but I'm going to take a little bit anyway at this really bad price. It's got to be like extraordinarily compelling for you to do that. Because what's going to end up happening most of the time, or a lot of the time, is when that trade doesn't work, you're going to feel the pain entirely unnecessarily because you didn't execute properly. So it is going to be better almost always to miss the trade entirely and watch everyone around you make money, as tough as that can be for your own psychology, than it is to chase stock, to be late on trades, to have worser pricing and worser risk reward. That's my spiel on that. By the way, it is still dumping snow out. It's crazy. You guys probably can't see out my window. I would point it out the window here so you guys can see this crazy storm, but I think that you'll just get like a blur going on. You know what? I'm gonna try it one time real quick just to see what this looks like through the camera. Does that just look like white outside? Are you able to see that it's dumping snow? Yeah, it kind of just looks like white, right? The lighting on there. Anyway. Yeah, Scott, I believe it. The camera is on the YouTube, Cap Homes. Most people switch over to the YouTube for the broadcast so that you can see the camera. I can't have the camera visible on both YouTube and the virtual trading floor at the same time, which is annoying, but whatever. Anyway, that's all I had to talk about. Oh, also, I should have made this reminder in the beginning of the meeting. I'm doing this Twitter Spaces, whatever. I still don't even fully know what that is, so hopefully I get in properly. At 7 p.m. Eastern today, it's going to be me, it's going to be Scott Rudler, it's going to be Kira Turner from, what do they call that virtual trading floor room? The one where David Prince is in? I don't even remember what they call it. I should really know these things. But it's going to be the inner circle. Thanks. So it's going to be a Twitter podcast space thing, whatever they call it, with the three of us, and I think someone else who I don't know who it is. And the discussion topic is going to be talking about trading in sports, because obviously, Scott was is a triathlete and marathon runner. Kira was a rodeo person, and I was a professional kickboxer. I think Kira was a barrel racer at the rodeo, which I think is just super cool because now I'm out west and I get to see those things. It's the Trend Spider Twitter. I think if you look at my Twitter, if you follow my Twitter, there'll be some information on there where you'll be able to find it. So my Twitter is, or our Twitter, I should say, our Twitter is @ProDeskVTF. So I got to do a better job. It's on my list of a million things to do, is to do a better job with Twitter in general. Obviously we're getting stuff on YouTube, but if you guys want to give the Twitter a follow, it's cool also. And then the link to the spaces. I don't know if you can have the link to the spaces until it actually starts, but it's through Trend Spider's Twitter, and whatever through mine. Oh, there you go. You guys know better. I don't know what I'm talking about when it comes to spaces. I never even heard of that until they asked me to do it like a week ago or whatever. All right, gang. That's all I got. I'm happy to answer any questions that you guys have. Cool. Yeah, I'm looking forward to it, I think. All right, scrolling up here in the VTF for questions. Yeah, we got Bed Bath & Beyond tomorrow morning. I see Edwin just saying ATER. I'm not sure if there's a question. Oh, this thing's moving after hours. I'm not sure if we got news on this ATER. Up 30% right now. Biopath is another one that's moving here after hours. BPTH, right? Oh, it's already back down. We've seen this stock have some memeing in the past. Just be careful with it because it always seems to come all the way back down. Yeah, ATER. Let's take a look at. Oh wow, look at this daily on ATER. This thing has really woken up. And this was one of those names that had gotten just destroyed. I moved from $19 down to $2, and now it's been waking up here again this month. So we can continue to keep an eye on it. Cool. What else, guys? Anything else? See Andy. All right. Well, if no one's got any questions, you probably feel like how I do, which is, I don't know. This market today was difficult, disheartening. They made it. The only thing I can see that was a good thing about today's market was that the gap up was so big that we didn't want to chase price. So hopefully no one really got caught in anything today. But if no one's got any questions for the day, I'm happy to wrap things up a few minutes early so I can catch up on stuff. And then I will hopefully see you all for the Twitter space thing at 7 o'clock Eastern later today. All right, have a great night, everybody.